The American stock market is going to crash. I can't tell you when this crash will happen or how violent it will be, but I assure you, unfortunately, we will have a crash. Now, those words aren't mine. They belong to the American author and journalist Andrew Ross Sorkin. He said this just a few weeks ago, back in October, during an interview on the show 60 Minutes. He was responding to a direct question from CBS host Leslie Stahl. Do you think that we will have a crash or not? In other words, will the American stock market collapse? This is the question on everyone's mind right now, not just in the US. The reason it's being asked so much is because the US stock market has soared to historic, unprecedented heights that many believe are completely unjustified and irrational. And here's the most dangerous part, the detail that has so many people on edge. What's driving this meteoric rise is just one single sector: artificial intelligence. The vast majority of the market value increase we have seen in US companies since the start of 2025 is all thanks to AI. The amount of money being poured into AI is just staggering. It feels like almost everyone is betting the farm on artificial intelligence, as if the American economy has no other promising sectors worth investing in. This massive, frantic rush into AI-related companies is precisely why the market couldn't stop buzzing about the AI bubble. Major investors, heads of central banks, CEOs of the biggest tech companies, academics, and experts, they're all saying it. The US market is currently in the midst of a massive AI bubble that, if it bursts, will hurt everyone. And yet, despite all the warnings, people can't stop betting on AI. They are pumping in unimaginable amounts of money. And the craziest part is that this is all happening at the exact same time that numerous indicators are showing that AI will never deliver the profits needed to justify these astronomical investments. But this market madness won't last forever. It has to end. And that end, which might be closer than we think, could trigger violent financial and economic shocks for both the US and the global economy. And that, of course, includes us. So, how did this bubble form in the first place, and how might it burst? How could it lead to a severe global financial crisis? And the most important question of all, why are so many people about to lose so much money because of artificial intelligence? That's part of what we'll be discussing today. This is the Economy Reporter Plus. Don't forget to like and subscribe for more insights. Welcome back to the Economy Reporter Plus. Imagine for a second that you want to start a new company. You've got a great idea, you're smart, you're ambitious. The first thing you do is look for investors to get some funding, right? Now picture yourself walking into a meeting with some of the biggest venture capitalists in the world. They're going to ask you two fundamental questions. First, what does your company actually do? And second, what's your plan for the future? How are you going to use our money? Now hold that thought. Last February, Mira Murati, the former CEO of OpenAI, did just that. She announced her new AI company, which she named Thinking Machines Lab, and just like any savvy founder, she started seeking investment. But here's where the story takes a turn. When investors asked her those same two basic questions, her answers were, let's just say, unconventional to the question of what do you do? The answer was, there is no product and no service. We literally have nothing right now. And to the question about the future plan, the response was, the future is in God's hands. Our fortunes are up to God. We intend to do good. And then the real kicker, please just give us the money. No questions asked. I'm not exaggerating. That is literally what was said to investors. On September 26th of 2025, The Information magazine quoted an investor who had a pitch meeting with Murati. This investor said Murati shared only very few and vague details about what Thinking Machines was even working on. He described the meeting as, and I quote, the most absurd investment pitch meeting I have ever attended in my life. So what happened in that meeting that was so absurd? What upset him so much? Simply put, Murati basically said, folks, we are building an AI company and we have the best experts in the field, but please, we can't answer any questions. Don't ask us what we're doing or what we're going to do. Just give us the money so we can build this amazing thing that you will never know about, and frankly, neither do we. Now, common sense tells you this is ridiculous. In the high-stakes world of venture capital, a company with no product and no clear plan shouldn't get a single dollar. That's the logical, normal response. But that's not what happened with thinking machines. Not even close. The investor's reaction to Murati's vague, shapeless pitch was astonishing. It went beyond anything you could possibly imagine. Last June, investors gave Mira Murati $2 billion in exchange for a stake in her company. $2 billion. That's not just a big number. It's a historic one. Never in the history of venture capital has a company received $2 billion entirely in its seed funding stage. It has never happened. There are massive established tech companies that haven't raised that much money over their entire lifetime across all their funding rounds. But Thinking Machines got that amount in a flash, with no product and no stated plan. And on top of that, the company was valued at $10 billion before the investment. This means its market value shot up to $12 billion after that June funding round. Now, we can't be certain if the investors who handed over this money know what they're doing, but what is certain is that their decision is part of a much larger trend we have been seeing in the US market for about 3 years now. We've watched as market participants have been, for lack of a better word, drooling over anything that even has a hint of artificial intelligence. The word AI has become a magic spell for the vast majority of investors. It's now synonymous with growth, prosperity, a technological revolution, and most importantly, limitless financial gains. In this environment, many in the market view AI companies as the wealth train, and anyone who doesn't jump on board at the very first station will live to regret it forever. What's fueling this incredible enthusiasm and almost blind optimism? Well, the market is practically drowning in rosy predictions about the future of AI. The core idea they all revolve around is that AI will completely reshape the global economy as we know it, and it will do so within just a few short years. Take, for example, Sam Altman, the CEO of the famous American AI company OpenAI. Last September, in 2025, he told the German newspaper Die Welt, "I can easily imagine a world where AI performs between 30% and 40% of current economic tasks in the near future." These are the kinds of statements that investors hear, internalize, and act upon. For instance, investors at the powerhouse venture capital firm Sequoia Capital have said that AI will cause an economic revolution on the scale of the Industrial Revolution, if not even bigger. Along the same lines, someone like Gavin Baker, an asset manager at Atrides Management, says that the key figures in the AI field aren't just trying to create market value in the tens or hundreds of trillions of dollars. He claims they are in a frantic race to create what he described as a digital god. So, in short, the prevailing narrative that has taken hold of the market is that AI is going to fundamentally change the world within a matter of years, and whoever catches this wave from the very beginning will make unimaginable amounts of money. This narrative really started to dominate the market about 3 years ago, specifically after OpenAI unveiled its now famous large language model, ChatGPT, back in November 2022. Building on that moment, market participants began betting on the future of AI in a way that is both astonishing and completely unprecedented. Just think about this. In America, from the end of 2022 until now, do you have any idea how much the total market value of the US stock market has increased? It has gone up by more than $27 trillion. Let that sink in. $27 trillion. To put that into perspective, that's more than the entire GDP of China and Japan combined. This astronomical rise isn't just about a healthy economy. It's a direct reflection of the massive speculative bet that the market is placing on the transformative power of artificial intelligence. The story of Thinking Machines Lab isn't just an absurd anecdote, it's a symptom of a much wider phenomenon. It shows a market so captivated by a single idea, so convinced of its inevitable triumph, that the old rules of investing, like having a product or a plan, have been thrown out the window. The fear of missing out, or FOMO, has become the primary driver of investment decisions. The question is no longer what does it do, But is it AI? This gold rush mentality has created a bubble of expectations that is growing at a breathtaking pace. Everyone wants a piece of the future, even if that future is, as Mira Murati put it, completely undefined. But as with any gold rush in history, we have to ask ourselves, is there really gold in those hills for everyone, or are many just chasing a mirage, fueled by hype and speculation? The $27 trillion question is, when does this bubble pop? And what happens to the global economy when it does? Only time will tell. But one thing is for sure, we are living through one of the most fascinating, and perhaps one of the most perilous moments in modern economic history. If you found this interesting, don't forget to like, subscribe, and hit that notification bell. Have you ever looked at the stock market and thought, wow, the economy must be booming? Well, let's talk about that. At the end of 2022, the US stock market was valued at around $40.5 trillion. By September 2025, that number had skyrocketed to nearly $68 trillion, a historic surge. But what's behind this massive growth? It's not the entire economy. The main driver is just 7 US companies, the Magnificent Seven: Apple, Microsoft, Amazon, Alphabet, Meta, Tesla, and Nvidia. Their combined value exploded from under $7 trillion to over $20.7 trillion in that same period. Today, Nvidia alone is worth a mind-boggling $5 trillion. The reason for this astronomical rise? One thing, investor hype about artificial intelligence. A technology whose real-world impact, by the way, is still a giant question mark. Textbooks tell us the stock market mirrors the economy. A booming market should mean a healthy economy, but that's not what's happening here. The S&P 500 index, which tracks the 500 largest US companies, jumped over 90% between late 2022 and late 2025. You'd think the US economy was on fire, right? Wrong. When you dig into the numbers, it's all about the AI craze. Analysts at Morgan Stanley and JP Morgan found that the Magnificent Seven, plus about 34 other AI-related companies, were responsible for 3/4 of the S&P 500's total returns. They accounted for 80% of profit growth and 90% of capital spending. The other 450-plus companies? They were left with the crumbs. So the US market isn't rising because the economy is strong. It's rising because of excessive, unchecked optimism about AI, and many are calling this excessive optimism what it is, a bubble that will, sooner or later, burst. The bigger the bubble, the more destructive the explosion. Recently, the talk of this bubble has grown louder because tech companies are facing some very tough questions they can no longer dodge. Questions like, what's the actual return on the hundreds of billions being poured into AI? US tech companies plan to spend $400 billion this year alone. What is the real-world impact on productivity? Do you even have a profitable AI product yet? Then came a study from MIT that sent shivers through the market. It found that in 95% of cases where companies adopted generative AI, there was zero measurable positive impact on their profits, zero. If that's true, it's a disaster. The entire insane valuation of these tech giants is built on the belief that AI will revolutionize productivity and that people will pay big money for it. If a major study says it's not happening, the whole premise collapses. A month later, another study from Harvard and Stanford explained why. It turns out employees are using AI to create what the researchers call superfluous work. This is content that looks amazing on the surface but lacks the substance to actually get a task done. Instead of being a tool to boost productivity, AI is becoming a burden, wasting time and resources on impressive-looking but ultimately useless output. This is the reality on the ground, far from the market hype. As of now, there is no single AI product or service that justifies the massive bets being placed on its future. Just look at the biggest name in the game, OpenAI. They plan to spend over $1 trillion in the next 10 years on development. Fantastic. The problem? Their current numbers suggest recouping that money is impossible. OpenAI's annual revenue is just around $13 billion, mostly from ChatGPT subscriptions. Out of 800 million users, only 5% are paying customers. Not only is $13 billion a tiny fraction of their spending plan, but the company actually posted an operating loss of $8 billion in the first half of 2025. With these numbers, how can OpenAI ever repay its investors? They need a miracle, a supernatural product to appear out of thin air just to start making logical profits. Yet they're seeking a $1 trillion valuation in an IPO. To make matters worse, their much anticipated GPT-5 release was seen by many as a disappointment. Even Sam Altman, the CEO of OpenAI, the man who helped create this hype, seems to agree. After the GPT-5 launch, he reportedly admitted to a journalist that there is an AI bubble and that we are in a phase of excessive enthusiasm. When the king of AI says it, the market has to listen, and it's not just him. The Bank of England has warned of the increasing risk of a tech bubble bursting. The head of the IMF, Kristalina Georgieva, issued a similar warning, noting that a sharp correction could slow global growth. There's a growing consensus that the economics of AI just don't add up. As hedge fund manager David Einhorn put it, there is a reasonable chance of a tremendous amount of capital destruction. So why isn't everyone running for the hills? Well, us market participants either refuse to believe it or they're pretending not to see it. Because the consequences would be devastating. 80% of the US stock market's gains in 2025 came from AI-related stocks. A sharp correction would ruin households and investors, both in the US and abroad. How bad could it be? Jita Gopinath, former chief economist at the IMF, estimates that if the market corrects on the scale of the late 90s financial crisis, American households could lose about $20 trillion in wealth. That is nearly 70% of the entire US GDP for 2024. Foreign investors could lose another $15 trillion. But what is truly terrifying is that global economic conditions are much worse now than they were back then. We have trade wars, high government debt, declining confidence in the dollar, and political instability. In an article titled "A Crash Like No Other," Gopinath warns, it is unlikely that a market collapse today will lead to the short and relatively mild economic downturn that followed the financial bust. We must prepare for more severe global consequences. In short, the world needs to buckle up when this bubble bursts. The us won't suffer alone. It will take the whole world down with it. And that brings me to this episode's question for you. Could the bursting of the AI bubble set the United States back economically forever, allowing China to take the lead? Or will America, one way or another, remain on top? I'm looking forward to reading your answers in the comments. If you enjoyed this deep dive and want to see more content like it, make sure to subscribe to the channel. Thank you for your support, and we'll see you in the next one.